State Auto Insurance Companies is a multi-line, super-regional company writing in 33 states. The company has no interest in shrinking, it does want to grow. But knowing where, when, and how to grow is the challenge that faces CEO Bob Restrepo.
The analysis that we've done with the PCI, which is a trade association that we're actively involved with, within property and casualty, the issue really isn't size. There are some specialty markets, perhaps like municipal bond insurance or mortgage insurance, where there's much more of a concentration of few carriers, and if one carrier gets in trouble, that market could be at risk. The big issue that we see is really too interconnected. Actually municipal bond and mortgage insurance are an example of a property and casualty type product, even though it's very specialized, that has an economic impact well beyond what people would traditionally look as standard property and casualty risks. So the real focus, I think, from a regulatory standpoint is going to be on interconnectedness, not size.
Acquisitions is definitely part of State Auto Insurance Company's growth strategy. The most recent acquisition was Rock Hill Insurance Group. Bob Restrepo sees more down the road.
Acquisitions are critical to our long-term growth. Our long-term strategy is over time to have about half of our growth come through acquisitions and about half of it to come from organic growth. And our focus has been on smaller companies, $50 to $250 million in premium, that have good underwriting fundamentals, strong agency relationships, and allow us to diversify. And we've diversified by affiliating with patrons in New England, by acquiring a company in Texas, which was a stock company, and most recently with Rock Hill, which is a commercial line specialty company. And our goal is really, put simply, is to diversify. We diversify geographically with a Beacon and a Patrons, and we're looking to diversify product line-wise with a commercial line specialty business such as Rock Hill, which will allow us to better balance our traditional property-oriented business with more casualty business.
All insurance companies' executives preach against price cutting to gain market share. We asked State Auto Insurance Company's Bob Restrepo what he sees really going on in the marketplace.
It's still a very competitive marketplace. Where we compete in personal lines, prices are increasing. Personal lines is a very disciplined market. It tends to be more concentrated and fewer players. The advent of techniques like predictive modeling allow us to really monitor our margins and be much more responsive in making the pricing adjustments we need to preserve our profitability. The commercial lines marketplace is much more fragmented, where we deal with, where we really focus primarily in is the small to medium-sized market. That remains very competitive. We're starting to see price decreases moderate, and I expect in the second and third quarter we're going to start seeing some modest increases. That's going to be masked by the economy. We're not going to get the same kind of premium yield that we've had in the past because the premium basis is declining, particularly in trades such as construction. But our margins will start increasing because we'll start getting at least less rate decreases, and I think over time some modest rate increases.
State Auto's own current book of business includes personal lines and small commercial. We asked Restrepo if he's happy with that mix.
We're just about 60% personal lines and 40% commercial lines. We've been 60% commercial lines for 40 years, our personal lines, I'm sorry. And we don't want to shrink ourselves to greatness. We'd love to have a balance of 50-50. A lot of our growth over the last 15 years in particular has come from acquiring smaller personal lines oriented companies and then cross-selling in our commercial lines portfolio. So every time we get a little closer to 50-50, we buy another smaller company, which increases the weight towards personal lines. But over time, we'd like to have a good balance. We're a terrific personal lines company, always have been. We've got a nice presence now in small commercial, increasing presence in the middle market, but where traditional regional companies have been the strongest is in the smaller commercial risks that require individual underwriting, individual pricing, don't lend themselves to a standardized BOP-like approach. We have not had as much success in that market as many of our regional company competitors, and that's where we see the real opportunity for us in the future.